When Murphy knocks, we're never shook. Phoenix Securitas got the playbook. Boing, boing. We block and spin. We're stepping tall, your premium safe. We cover it all. When Murphy knocks, knock, knock. Our coverage blocks, block, block. Phoenix Securitas, we rock around the clock. Ooh, yeah, no sweat, no shocks. Squeak, squeak. We've got the groove, we've got the vibe. When chaos calls, we're on your side. Hold the line, we got that spark. In sunny days or when it's dark, Murphy comes knocking, but we're solid as stone. Kept intact, your cover's homegrown. We step up, we never deflect. Your peace of mind we protect. When Murphy knocks, knock, knock. Our coverage blocks, block, block. Phoenix Securitas, we rock around the clock.
Okay, and we're back. Usually I am back by myself, but this time I am not alone. In Vantage, nobody is ever alone, right, Susana?
Right, Marimel.
And we're coming from here, from Texas, and where are you from?
California, all the way from California.
Amazing, right? So the people that say that Texans and Californians don't get along, that's a lie. It's all a lie.
They got all wrong.
So hello, everyone. Welcome to today's session. I'm Crypto Rican Insurance Queen, formerly known as Crypto Rican Queen, and my esteemed colleague, Susana Fuentes. We're both licensed insurance agents, and we're committed to empowering you with the knowledge you need to take control of your financial future. And this is important because right now, we got a crazy thing happening with the market. Right, Susana?
That is right. Right now, it's just happening. Just too many things are happening at the same time. It's just a lot of uncertainty. We're not really sure what's going on. So a lot of people are scared. They're panicking. They're not really sure what to do. But we are here to calm you down and to reassure you that there's a lot of things that we can do for you.
Exactly. And again, we got downgraded. And why are we mentioning the economy when we're going to be talking about 401ks and annuities? Because they're connected, right?
Absolutely.
And for me, it's a little analogy, and reminded me that for me, 401ks are like crypto a little bit because it goes up and goes down, and you always have to pay Uncle Sam sooner or later, right? 401ks are going to be later, and I don't know. Do you think that the taxes are going to be higher today or in 10 years? Anybody? I mean, you, Susana, what do you think?
Yeah, you know what? That's actually something that a lot of people struggle to understand. Taxes are there to make sure that they get applied, whether it's today or tomorrow, right? So we're not really sure what's going to happen, but in my understanding and my historical perspective is it's always gone up. So if you think you're not going to be able to get away, from paying those taxes, well, you can't get away from them. If there's something we can do is get rid of student loans and taxes, right? So we want to make sure that we understand how those work. And the best thing to do is for us to have the resources necessary so we can understand where our tax brackets are set at. And understand, too, that as the economy continues, that the years continues, those increases will happen. So the increases will be there. So what do you want to do? You want to kind of understand where you're going and get prepared for that? Or do you kind of want to be surprised and think like, oh, I didn't know that, right? So yeah.
But let's be real. If everything is actually going up as we speak, every day that we go, if you go every day this week to buy something anywhere, you're going to notice what? That the price of a bottle of water is not going to be same today and tomorrow. So if that is happening right now as we speak, it's logical, right? That the markets are not, since the markets are not doing that great, everything else is going to keep going up. So that is what we're here to talk to you about, because if you think your 401ks are going to be around in 10 years, if the market keeps going the way it is, you might have a very small nest egg, and whatever you supposedly thought you were going to have, you might not have. And that's a problem that we see with the 401ks. Right, Susana?
Yeah. And, the saddest thing is that we work so hard. Most of us, we're working, hustling, we're putting our, heads down. We're just going for it. We just show up for ourselves every day. And then all of a sudden we see these different fluctuations in our economy, right? And then we get a little bit like cautious at that point. We're like, man, should I start doing something? And then someone says like, no, we're going to be fine. Just keep on going. And the reality is that we can't just be okay. We have to be prepared. And the best way to do things is to be able to apply the resources that we have already on our end, right? So as financial professionals, we can go ahead and give that information to everyone. And the best way to do it is understanding the options, the resources that are out there for everyone. And it's very unfortunate, we get a lot of clients coming in, they're in their 65, 60 years old. And so, they did have at one point so much money. And then all of a sudden with the economy after the COVID and like before that, 2008, a lot of people lost a lot of money. So now they are in a point where they can't work as much as they did before. There's really no time to make up for it. So as you want to understand that, we cannot make up for time. Once time is gone, it's gone. And the same thing with our finances. If our money is to drop and, we don't have enough funds set aside and other resources, and, you got to think about, I always say this, think about your retirement as a drip system. If you're in an orchard, here in California, we have a lot of orchards, right? We're known for our crops and stuff. And farmers out, they make sure they have a drip system. Why? Because they want to make sure that every single area is being taken care of. It's hydrated. Same thing with us. We got to use our sources, our retirement sources as a drip system. We got to diversify it. We need to make sure that we are having different opportunities for ourselves, whether it's a 401k, whether it's a Roth IRA, whether it's an annuity, an index universal life, something that's going to give us something. So when it's time for you to turn on that water, that you have all these different types of drips coming out. That way you have not just one, but many of them. So it's going to be a lot of resources for you. So it's absolutely correct. You are right.
Yeah. So you said all that stuff that you said, it just took me into that we have not only one enemy when it comes to our money bags, right? It's inflation, taxation, and black swan events. You mentioned C19. That was a black swan event. We got issues with inflation and taxation. Those three things. So don't think that it's only the economy that is going to eat at your nest egg. It's three things. And on top of that, she mentioned, again, the majority of the people that are basically expecting to retire, will they retire or not? Let's be real. The majority of people, especially the Latino population and the Blacks and Latinos, most of us work till we die. And I'm sorry, but I don't know about you. I didn't come to this world to work until I die. That's not what I came here for. I mean, if you guys love to work until you die, great. But that's not what many of us came to do anyway. So basically, let's start with the basics with a 401k. A 401k is an employer-sponsored retirement savings plan. You contribute a portion of your paycheck before taxes, and often your employer matches a part of it. Of course, some people are putting money in there and they're not getting matched. I don't know why. But this money is invested in various assets like stocks and bonds growing over time. So if the market is going down, it means that that your 401k is going to go down, right, Susana? Tell them about the key.
That's right. Yeah,
401k.
Yeah, the thing of it is people need to understand that, having that resource from your company, it's a really good incentive to keep us on an employee, right? When we get this package from our employer, it's something that we like to see because we're like, hey, they're taking care of me. They're making sure that I have something for tomorrow, which is great. But you need to understand that there's going to be fallbacks because the 401k usually participates in a variable fund, meaning it goes up and down. It's like a wave. It goes up and down. When the market goes up, everyone celebrates. When the market goes down, everyone's upset because you cannot replace the money because the money does not come fast enough to be replaced. So a lot of people don't understand how that concept works. And that's what we're here for, to make sure that you do understand. The 401k is a great source of income for retirement as long as it's not losing so much money. So I guess you can go ahead and put into a low to medium, I think, level of risk. But at that time, you also have to be putting in a lot of money so it can kind of offset itself if you do get losses. But absolutely, like you're saying, we need to make sure that we understand how inflation impacts that as well and how other factors too, because you have to remember that even though we do have that 401k, we have hardships that happen to us. So I had a client to me, they come in today she came into the office today and she had about $150,000 worth of 401k at one point, but then hardships started to happen. So she didn't have any more outlets, any more other kind of sources of income. So she started tapping into her 401k. So factors happen, these things happen, and then you're
the penalty.
Really prepared for them.
How much is the penalty? Isn't it?
Exactly.
10% or up?
Yeah. The
Under
amount is
59
coming
years
down.
old is horrible, right?
Yeah, the amount is coming down. You're having to use it. You have no other source of income. You have no other sources to get from. So, 401ks are there. They serve their purpose. It's great. And, that's what we want to make sure to let you know, hey, if you have a 401k, you have to understand there's going to be other factors that might not guarantee that money is going to be there when you need it. And most of the time when we need it is because we're retiring. And then what do? Are we going to go get another job? Probably not.
This is what I said, that the majority of people don't end up retiring, because that's why you see really, really the elderly working as greeters in Walmart. But when you were talking about the ups and the downs, again, reminds me of crypto, but it also reminds me of the 7 years in the Bible, the 7 years of fat and the 7 years of lean. If you are ready when the times are good, you can outstand any kind of market. But the 401k is not that tool, especially if you're not getting matched. Especially if you're not getting matched, it's not the tool for you to be happy on the fat and lean years, right?
That is correct. Yeah, because just like money, just like the famine and other things that we've seen historically happen here, we have to be prepared. And the way it works is there's rules of money that apply. If we don't even understand the rules of money, how they apply, then it's really hard for us to even understand how we can move our money, how we can build from our own money, right? So, within the 3 rules of money, we talk about how to duplicate our money. We need to be able to be duplicating that money as soon as possible. So the rule is that we should be doing it between 6 to 7 years. The money should be doubling. But what if you're losing during those years? You're not making enough money to take care of those losses. You're going to end up in a very tight problem. And that's where a lot of people end up, taking all their money out, and then they get taxed, and then, they get a little bit panicky because there's not that much money, growing for them. So it's always so important for us to understand that we need to understand the rules of money, understanding how much money you're getting for the return, how much you're getting of interest accumulation. That's called an interest compound, right? You want to make sure that you're making enough money. But at the same time, what good does it do if you're making a lot of money and then it's dropping more than you made?
Exactly.
It's kind of like reversing
we got
the effect.
The issue. Inflation is usually 3%. So you're already losing as is. So if you have a losing pot of gold because of inflation, and then you got the market going down, you basically are trying to fight a losing battle. And I think a lot of people don't understand why. I usually don't talk too positive of 401ks, and it's because of that. If you have your money in a bank, you're losing more money because your money is not growing. If your money is not actually making you money, you're losing because of the inflation, taxation, and the possible black swan events. We already had a pandemic for 2 years, and that was horrible. I mean, how much money was lost around the world here in our country, and how much of the 401ks were affected at that time? I imagine it was just, I mean, I don't know. I never had a 401k, but the rules of money for me, unless it's being matched, I wouldn't have a 401k. Again, in a percentage, if you're getting matched 3%, just put that same. Don't put more and don't put less, because then you're not getting equal by your employer. But again, the main point of the 401k is to put money for later, and it's tax deferred growth, right?
Right.
Usually you can't use without a penalty until 59 and a half. And that's why usually, what do we do with people that they're not working there with us, that employer anymore, for the 401k? We tell them to roll over that money into annuity. Right, Susana?
Right. So let me get a little input what you were saying about, not making enough money while you're having the bank. And that's one thing that we do here as financial professionals. We teach people how to become their own bank. If you understand the concepts of how to make money, how to go ahead and outsource that so you can get more accumulation than a regular bank, you'll become your own bank. So just so people understand, when you put money in the bank, it's doing 2 things. It's guaranteeing that what you put in stays there. So it's not going nowhere. But it's also in a very low risk because it's not participating in any kind of market. So it's going to stay stagnant. It's going to just stay there. So today, what you put in will be there in the next 72 years. because the minimum amount that you get in a bank account is probably like 1% or a little bit less.
But
So in the rule of
isn't it,
72,
but Susana, don't, as soon as we get money in the bank, what do the banks do?
well, that's where I'm going to. They become the expert on your money. They actually lend out that money at 9%, 6%, 10%. So they're making money on your money. So we're trying to flip this around, right, Money Man? We're trying to flip this around
Flip it.
to change our mindset that we need to be the bank. We need to be the one in control with our money.
Mm-hmm. Flip the script. And it's time to us to flip the script. And I think a lot of people don't understand that that's what the bank does with your money. And if I took money from your account, Susana, today, without your permission, what would you call that?
Stealing.
And then I will be making money off your money. I took your money without your permission, made money off of you, and I don't give you anything but fees. If you don't think that's messed up, I don't even know what to tell you guys. That's what's happening with your 401k too.
And the thing of it is, but we have to be also like kind of a little lenient on that, because we do have these incentives that do get put in place for corporations, right? They want to make sure to take care of us, and that's nothing bad. I am actually for 401ks. I'm for diversifying our incomes. Just like Money Med, I don't have a 401k, but I am okay with that because I think that I had the understanding since I was younger to be able to understand how to place my money in different spots. But the people that have a 401k, that's okay. We're just trying to give you different resources, different opportunities that there's out there that you can make sure that you're benefiting from. So even if you have a 401k, that's okay. Even though you have money in the bank, that's okay. But the best thing is that you're here today. You're going to learn how different concepts, different strategies, so you can be able to, grow that money. So, I've always been okay with that. I mean, I think
that's funny. So you see, I like this because I love this because you see two different people with two different ideas about 401ks. The only thing for me that to put a 401k is for you to be matched. If you're not being matched, I wouldn't put money there. But she is for it, and that's great because at the end of the day, you decide what you do with your money. But the main point that we're trying to make is, do you want your money to grow? And everybody will say yes. And so I think the problem I see with the 401ks and why I don't like them for people is because most people don't know of all the fees that they're collecting and all the things, how much this is connected to the economy, and people trusting that that's going to be around. And then suddenly when they go to actually partake of their money, then they don't have all the money that they thought they put. And so that's why I get a little bit like, hey, don't put money in a 401k unless they're matching, because I think there's a lot of ignorance when it comes to anything financial. And this is one of the reasons why I don't like 401ks, which makes sense, right?
No, yeah. And, I'm open to that. I think it's a great incentive the corporations do because, corporations have been around for a long time and maybe it's not built exactly like that. And it's unfortunate because but that's another thing is too, if you have a 401k, you can also go ahead and be a low risk, but most of us maybe don't come from families that know a lot about finances. So then we kind of let whoever's in charge of our 401k put it, and then we see all this happening. But you know what? We're here to make sure that we can just, give them more, give them more resources. And having a 401k, what happens if you do lose the money? What happens if you're 59 and a half? What happens if you get laid off? We're seeing that a lot right now happening. And this is where we come in. We're here to say, hey, you know what? If you're 59 and a half and you lost your job, or 59 and a half and you already have that money ready, that means that you are able to go ahead and start taking that money out. We can roll it into a similar plan, but the plan's not going to help. It's going to only stay steady. It's going to participate in a ladder effect, meaning to say when the market goes up, it goes up. And when it goes down, you stay put. Exactly. So you're able to transfer that out, right? And then we are able to teach you how you can do that, how you understand the concepts. And then not only that, if you're 59 and a half and younger and you've lost your job, we see a lot of people losing their jobs. And you see a lot of people have participated in a very large amount into a 401k and their money's just sitting there, but they need that money. And what we can do is we can kind of figure out what's the best plan for them. We can help them get a budget. We can make sure that we put them into a new plan. There's just so many different things out there. But if you're 59 and a half and over, you can go to roll it into an annuity that will continue growing, not losing. It's no longer going to participate in the downfall. And as well, if you did get retired, if you did kind of lose your job or something happened, along the way, you're 59 and a half and younger, you can do the same. because it's not going to keep you from doing it. So it's just all about the understanding and the concepts that we teach here to be able to have that opportunity given to everybody, depending on their circumstances, right? But
yeah, and there's
it's a
also
win-win.
those,
It's a
Susana,
win-win.
to the TSPs and the 304, is it 303Bs or something like that for the first responders. We got the military, the federal government, and then we got the 401ks. But anyway, so she mentioned the word annuities, and a lot of the people don't know what is an annuity. But basically, an annuity is a financial product that provides a steady income stream, typically for retirees. You invest a lump sum, a series or series of payments, usually is a lump sum, and in return, the insurance company guarantees a period of payments to you. So can you talk a little bit more about that, Susana?
Yeah, with the annuities, absolutely. The annuities allows us to be able to put the money somewhere where it's going to be guaranteeing the principal. Meaning to say, whatever you put in will not go down. And the best thing is that you're going to be participating in the market, but not directly. What that means, it's going to be participating in the index fund. So that means it's going to be, gaining when the market goes up, and it's not going to be, losing any money, and it's going to guarantee that the principal that you put in is going to be in there. So it's going to be a really good thing for people to have, because the participation rates, the interest accumulation is really well. Now, it does take about 7 years, depending on the plan that we choose for you. But that's why we do a financial needs analysis, to make sure this is going to be actually adequate for you. It's going to be able to provide the need, whatever that may be. So we're not going to go in here and do things without you knowing. This is about teaching you along the way, making sure you're going to feel comfortable and you're going to be knowledgeable of how annuities work. And some people are not going to benefit from them just because, they have too many offsets, they have too many things happening. But that's okay. There's always something else, right?
And I like the annuities because some of the annuities, some of the products and services that we offer are basically have bonuses. I know that one of the products that we have has a bonus of 22%. So I got somebody that is going to roll an annuity for a $200,000 annuity, $300,000 annuity. So if that person, when that person goes and signs in for the 300,000 annuity, that's 30, 3 by 22. So what? The sign-in bonus that you get, boom, you get a bonus right then and there. So a lot of the people in crypto would love to make 22%. You can do that without the risk, right? And boom, just by putting your money there. So that's that. And we also have the death benefit and so if something happens to you, what happens? And you have an annuity. Right?
Yeah, exactly. So the annuity, what happens is that it really helps you make sure to take care of yourself today and tomorrow with any kind of plan that we put in place. Sorry, I'm having some technical.
Are you having technical issues? Okay. But anyway, going back while she regains, the annuities are powerful tools to ensure you don't outlive your savings. They've done, surveys to elderly. And the number one thing is not that they're afraid to die. They're afraid they're going to outlive their money, because a lot of them will only live with Social Security. Social Security doesn't pay enough. Okay, let me remove you here. I don't know what happened. So she's coming back. She has like some technical issues. That's another thing that the elderly are worrying about, outliving their money. That the money that they have been saving all their life is not going to last them long enough. Or they might, long enough that it might just like disappear faster than not. And so that worry that the elderly have is something that everybody, even now, people that are not the elderly, are worrying it today, right? So these annuities offer a peace of mind with predictable income during retirement, and sometimes even protection against market volatility. Well, the ones that we talk about, they actually don't participate directly from the stock market, but if the market goes up, the annuity makes you money, and then it actually locks in that money that you made But if it goes down, you don't lose your money. So if you put $300,000, $400,000 in you're rolling over $400,000 401k to an annuity, and the market goes up, right? And for example, like we have the 22% signing bonus, you got what? $88,000, right? For example, 400,000 plus the 88,000. If the market goes high and your annuity hits 500,000, and then the market goes and crashes a lot, you're still going to be locked in the money that you make. That's the power of an annuity. Money growth, death benefit, and if you get terminally chronically ill, usually some of them let you get your money earlier too. Okay? So again, it's a no-brainer. For me, it's a no-brainer. It's a no-brainer. Okay? So we know that market fluctuations can be unsettling, especially as you approach your retirement. By rolling over a portion of your 401k into an annuity, you can lock in guaranteed income, shielding yourself from market downturns. I think today we got downgraded by Moody. Our economy and what the government is doing is not doing that great, that they actually downgraded. So right now, the stock market today, although they said that in the last 6 days we had a win streak, but Moody, let me see here, stock market. Where is it? They actually downgraded us, which means they don't think U.S. debt downgraded by Moody's over fiscal concerns. Okay? So the market Moody index operates on a scale from 0 to 100, reflecting investor sentiment at any given time. 0 to 50 indicates fear or cautious sentiment. A score closer to 0 signals extreme fear, while numbers near 50 suggest moderate caution. Okay? So for them to downgrade us means that they don't see a stability in the market. Okay? And some investors don't care, but like some do. Because U.S. borrowing costs stay largely flat. So anyway, let's keep talking about the topic at hand. And I don't know what happened to my partner. I'm waiting for her to come back. Okay. So basically, again, with annuities, it's a strategy about creating a balanced retirement plan that combines growth potential with security. It's important to assess your individual needs and risk tolerance to determine the right mix. So before we go and say somebody that should do this, we actually do a financial assessment and see what is the financial needs of the customer. And depending on that, then we as insurance agents then we're talking with the client, we both decide, hey, this sounds great. Again, if you have $400,000, $500,000 just in a pot where it's going down mostly, 401k, right? And you don't need it, right? Because you're not gonna retire until 20, 25 years, and you don't work for that employer anymore. Rolling that over makes sense, right? But again, it's a retirement vehicle, means that you're not going to be putting money in and out. Now, the difference is if you decide and you have an issue in 5 years, once you already roll over your 401k, there's a percentage that the annuity lets you take from. And usually I think it's 7 to 10%. So if the product is 7% and you have a $500,000 annuity that you roll, that will be what? $35,000, right? Yeah. That will be, you can pull some of that money according to the percentage once a year. But of course, the annuity is not for doing that. But again, if somebody has an emergency and that's the only money you got, it makes sense, right? To get it. Okay. So, and what do you need to be able to roll any of this stuff, right? Because let me go back here. See if she came back. Yeah, she's not here yet. So again, it has to be depending on each of the people need financial needs, because it's not, I cannot say, oh, everybody needs to do this. Okay. Okay. So let me talk a little bit while she comes back. I don't know what happened. What actually are the 401k economy impact? Okay. Because it's important. Because 401ks are directly tied to the economy because they're invested in the stock market. Here's a simple breakdown. When the economy is strong, companies grow, stocks go up, and your 401k balance rises. When the economy crashes, stocks drop, and your 401k can lose value fast. Since most 401k plans are invested in stocks, mutual funds, ETFs, bonds, target date funds. So if the stock market tanks or the Fed changes interest rates, your retirement money gets hit too. That's why people look for safer options like annuities or IULs to protect their gains, okay? So, and I wanted to do a comparison between 401ks and crypto because for me, they're alike in many ways. Both are market-based. They go up or down depending on market conditions. 2, both are risky. You can make money, but you can also lose it quickly. 3, both are long-term plays. They're often held for years, hoping for big gains. 4, both get taxed. Withdrawals from 401ks are taxed, and crypto is taxed when you sell or trade. I don't know what happened. She disappeared. So going back and comparing them in the tax area, 401ks, you contribute pre-tax money, lowers your income now. But every dollar you withdraw in retirement is taxed as regular income. So if you withdraw before age 59 and a half, you usually pay a 10% penalty plus income tax. Crypto is taxed as property, capital gains. So if you sell, trade, or spend crypto, it's a taxable event. Short-term gains held less than a year equals tax as ordinary income. Long-term gains with crypto held more than a year tax at capital gains rates of 0, 15, or 20 based on income. So crypto losses can be used to offset gains called tax loss harvesting. So for 401k, taxes hit on withdrawal, crypto taxes hit on use or sale. Okay? So what do you need to do if you want to roll over your 401k? There needs to be specific details so you can do it. First of all, if you leave your job, you can't roll over a 401k while still working for the same employer. You cannot, unless it's an all-in service rollover and your plan allows it. 2, do a direct rollover. Ask your 401k provider to send the money directly to your new account, IRA, Roth IRA, or annuity. This avoids taxes and penalties. You'll get a 1099-R form for tax records, but no taxes due if done right. And she is back. Although you are buffering, there she is. And I was talking about the what do you need to be able to roll over your 401k? And the first thing was leave a job. So you can't be with a job where you have a 401k. You cannot roll it over usually. Or do a direct rollover, which is an internal one. Avoid indirect rollovers is another thing. So what is the process of rolling over your 401k? Can you talk about that, Susana? Because I know
Yeah,
you've
and I'm
done
so
many
sorry
of those.
for that disconnection. Sorry for that disconnection. We're having weather issues. I don't know what happened out here. I'm so
Don't
sorry
worry
for
about
that.
it, girl.
So
We
yeah,
have weather issues in
what do
Texas
you
and
need? What do you
California.
need to roll over this? Well, it's an easy process. You need to make sure that you get a hold of us, get a hold of Marimer or myself, and then we go ahead and do a financial needs analysis for you. You want to make sure that whatever we're going to roll over is going to be adequate for your needs. And then after we do the financial needs analysis, we're going to go ahead and give you different illustrations. It's going to give you that more of like a forecast of what your money can do for you. So of course, you're going to need to make sure you have your statement with you and understand where you're at with your goals, right? We want to make sure that we have all the goal settings for yourself financially so you could be able to obtain them. And then pretty much we just do a process, which it would be an application process once we decide that we want to go ahead and go with it. It's a very easy process. It doesn't take that long to do. And then from there, the money gets transferred either electronically or you'd be able to get the money sent to you and via check with you being the beneficiary of a plan. So the process itself is not at all
How
hard.
long does it
I think the
take
hardest part.
Susana, can you tell how long in minutes can you do the process for the form, and then how long it takes? So like a week after you do the process and you get accepted that your money moves? Can you like be more specific?
Absolutely. The process, once we get the application, we're ready to rumble. It takes about I want to say like 6 or 7 minutes to do the application. It doesn't take that long because it's very easy to put in the information. Then from there, it depends on your company that you have, a carrier that you have a 401k. It could take anywhere from a week to 2-3 weeks, just depending on each case is very different. So that's why it's important for you to reach out to us so we can go ahead and get that information from you, and then we can go ahead and let you know how long the process would be. But the first
So
thing is
what
take the
happens,
first step.
Susana,
They need it.
once you get accepted and that is pending for the moving of the money from the 401k to the annuity? If something happens in the market, does your money get frozen because you're in the process of moving your money from a 401k to the rollover annuity or not?
No, unfortunately, it doesn't work that way. It's by the date of the transfer. That's why when we do the application, we want to make sure that it's available as soon as possible. So when we do is that we put an application to move the money as soon as they can. So we can eliminate this waiting moment so that you're not losing the money. So depending on your carrier, we will be able to either take out the money via check or electronically. They would take a little bit longer. That's why we as financial professionals, we stay on top of these kind of policies to make sure they go through as soon as possible.
Can you tell me of any kind of experience that you had with somebody, a client that was taking money? Let's say that they were taking 500,000 and something happened, and how much money they lost between the transfer. So I just want people to understand that is a urgency if you want to do something, because the market goes up and down and your 401k goes up and down with that. Can you tell me any stories of clients of that?
Yeah, most of the clients.
She's frozen again. Okay. Oh my gosh. I'm sorry, guys. She's frozen, but I don't know. When she comes back, she will tell us what is any story of things that happen. But again, the market moves, and your 401k moves with it. So again, you can roll over into an annuity for tax deferred growth and no market downside. That's the most important thing that I want you to get from the this talk. And she is gone again. I don't know. So what are the steps for the 401k to annuity rollover? First of all, again, we can do these steps for you. So if you have a 401k and you are not working for the company, we have really, really cool products like 22% signing bonus, right? So in a 22% signing bonus on a $1 million rollover of a 401k, how much is that? $220,000, right? Anyway, the point is your 401k is going up and it's going down. And until it moves from whatever to the annuity, it's going to keep going down, up and down, okay? So again, for the annuity rollover, it's confirmed that you're eligible. That's the number one thing. You must no longer work for the employer who holds the 401k unless your plan allows an in-service rollover. 2, choose the right annuity. When we are meeting with our clients, we tell you the different annuities and how your money is going to grow. We show you so that you can find a qualified annuity. So if you're concerned about market crashes, you either pick a fixed index annuity for upside potential with no downside risk. Let me say that again. If you're concerned about market crashes, a fixed index annuity for upside potential with no downside risk. Then you set up a direct rollover. And I'm sorry, she is having issues wherever she's at. Contact the annuity provider like me, because I mean, she is in California and I'm in Texas. I actually can do things in Texas and Florida, okay? Y recuerden que yo hablo español, ella también habla español, para la gente que necesita mover su 401k a una anualidad. Then go back to set up a direct rollover. You contact the agent. They handle a trustee to trustee transfer from your 401k to the annuity. No taxes or penalty. Then you fund the annuity. Your 401k money moves directly into the annuity. No 60-day rule to worry about when it's a direct rollover. And once that happens, you enjoy a tax-deferred growth. Your money grows tax-deferred. You only pay taxes when you start withdrawing like a traditional IRA. Okay? And she is back. Okay, she is back.
I am so sorry. You know what? We're having a really bad, I want to say windstorm out here or something, because like the reception, like I'm trying to get streaming done and it's just so embarrassing. I'm so sorry.
Is that a what?
There's not a problem, but we just have really bad weather.
I froze on purpose and you froze too.
Let me go back on what I was saying. Let me go back on what I was saying. The process is very easy. I have had stories where people are trying to transfer that money out. We want to make sure that we're very, on top of things to make sure that the client gets what they need. And the process is very easy. It's, I want to say sometimes, depending on the carrier, is a little bit more timely than others, but most of the time we can get these things done within a month, a little bit sooner than a month. I mean, that's our goal, is to make sure that we can get that opportunity for the client as soon as possible, because we don't want to have jeopardize any other income, right? We want to make sure that we're getting that money before it goes down. And I know we're watching the market, and you more than anyone know, crypto rig insurance queen, how things happen so fast. We need to be on top of things. We need to make sure that we are there, keeping an eye on everything that's happening, because we're going to be affected one way or the other. So this is what we do. We want to make sure that we're there. And if you have any questions, that would be, you can always put them in. I don't know if you have any questions coming in now, but if you are interested and that you're losing, everyone right now is losing money. Just so you know, everyone that has a 401k is losing money. Whether you like it or not, you're losing. Now the opportunity is here. If you are ready to do something about it, you need to get a hold of us right away. You need to get a hold of the Crypto Rican Insurance Queen, because she has your back and all this stuff. And now with her knowing so much about the market, it makes a big difference, right? You have so much expertise in it. So this is a great opportunity for everybody.
And it's funny what I'm going to say, what people in the normal financial system are basically say, because the market closes. In crypto, it never closes. That's all day, 24/7. With the 401ks and the stock market, they close at a certain time. And in the weekend, they don't do anything. But again, you see every time the market is open, all the crazy stuff that is happening with the tariffs and all that is affecting the market. Although it seems that in the last 6 days, the market has been doing supposedly good, but we got downgraded in Moody, and that's not a good forecast of what's going to happen in the next year. Personally, after being in the crypto space and being able to connect all the dots with the money since 2021, for me, I think in the next year or two, everything is gonna get bad to worse. It's not gonna be doing that great like some people think that magically a new president is like a genie and is gonna fix the economy. I personally don't think that that's what's gonna happen. So again, you need to protect your money. You're the one working for that money, and you don't want anything stopping you from accomplishing your set goals of becoming the bank and being retired in a beach somewhere around the world. I don't know, like, right? So
yeah, and it's true, because honestly, we don't know. I mean, sometimes we get, we're always losing focus, right? I always tell people, listen, we can't really change what's happening. We can only make things better for ourselves. We can't focus on what the president's doing, what this is. It does affect us, but we have to be very proactive on what we're doing for ourselves. If we know things are happening, we're getting this warning. It's almost like you see some clouds away and far away, things are going to happen. Don't wait until last minute. Go ahead and call us and go ahead and get an appointment with Mary and make sure that you are already on top of things. So if things do fall, hey, you're already taking that caution. You're already prepared for it. You're not going to sit there and be like, what if I would have done that? Yeah, the what ifs don't happen. They're only available.
Sadly, we have some people that are like avestruces. They're like ostrich. They don't want to know. They put their hand in the sand, and as the storm and the tsunami is taking all their house and family, they're there like, no, nothing is happening. Nothing is happening. Nothing is happening, and they're just drowning. I mean, seriously, this is that important, because nobody can work all their whole life. I mean, we could do it, but physically and mentally, it makes anybody just not happy, So again, it doesn't take that long. And if you're in California, contact Susana Fuente. And where's your information? You didn't give me your information.
You know what? Gosh, you know what? I'm going to tell you guys the truth. This is a great opportunity that's happening to me here with the Crypto Rick and Queen. But I am not tech savvy, and I hope none of you guys are going to think that I'm not like here for you. It's just, I need to learn a lot. And I told her, I don't want to let you down. Then all this is happening. He said, listen, you can go ahead and give me a call at 209-840-1751. That's 209-840-1751. If not, just go ahead and send a message to your Crypto Rican Insurance Queen, and she will get in touch with you. She'll make us get an appointment together. But listen, don't be afraid. The worst thing that can happen is for you not to be prepared. Even right now, just not knowing what's going to happen, at least get something going for yourself. And there's just so many other things that we can do for them too, Mari. And it's not just annuities. There's other things that we can offer them that we're going to be here talking about.
Let's talk about living trust, because since we're in this, you can make all the money in the world being with crypto, with stocks, with annuity, or whatever. But if you give it all to Uncle Sam, then what's the point? So a living trust, a trust, basically shelters all your assets under that dome of protection against paying any of those taxes legally. And so we also do that with our connection with lawyers that we have. We do normal trust, irrevocable trust. The lawyers do it, and we help facilitate the process thanks to them. And so I think it's another thing. If you want to be the bank, you need knowledge and you need to act, because the problem is that we have those of us that came from nowhere. I came from the island of Puerto Rico and didn't know anything about financial matters until I got into the business world. I had to learn a lot of stuff, and you had to pass that to your family members.
Yeah, can you hear me? I think it's frozen. But yeah, living trusts are something that we need to have. That's why we're here to help you to be able to build not just one protection, but multiple protections. So it's so important that we can go ahead and have an appointment as soon as possible. Any of you having a living trust, it just makes a big difference, right? Because you're ensuring that you are taking care of everything that you have, whether it's assets or any, even just last minute desire. I mean, not desires, but like, just making sure that your stuff is taken care of. So you can protect that from anyone interrupting any of the stuff that you want to do, right? So absolutely.
Well, guys, I am sorry. I don't know what happened, but you guys completely lost me. Because I guess we have an issue here in Texas too with the weather. I don't know. And it was gone. But again, all we've been talking is how to take control of your retirement savings and how that is empowering. By understanding your options and making informed decisions, you're stepping out of the traditional financial matrix and into future you design. So I want you guys to understand that we're here to support you in every step of the way. Let's work together to build a secure and prosperous retirement plan. And she sent her information so if you guys need anything, please call her to the telephone she said before. And both of us speak Spanish. I actually can do rollovers in any of the 30 states. So if you're in any of the reciprocity states, let me know. I can actually do it and help you. But it always starts with a financial assessment. And I don't know if she's coming back. I was trying to see if she comes back. But basically, you can see this recording from the beginning on how we explain how to unlock your financial freedom with the 401ks. And if you're not working for that person, that employer that had your 401k before, it is good to consider a rolling over your 401k to an annuity. So let me see. Let me call her, because at the end of the day, I was trying to. Okay, well, I'm going to say bye. Thank you guys so much for listening to us. But at the end of the day, you already know who you need to contact. And we're going to say goodbye with music. This is my website. Okay. So let's put a little music and we can say goodbye to y'all. Okay.
Yeah, no sweat, no shocks. Whoosh. From the desert sands to the city scenes, we've got the swagger, we keep you clean. Your trust, our badge, we hold it tight. Phoenix brings the funk day or night.
Remember, the 401k moves with the whims of the market. That's not good for a retirement plan unless you get a match. Okay? So we see you next time.
Knock, knock. Our coverage blocks. Block, block. Phoenix Securitas, we rock around the clock. Yeah, no sweat, no shocks.
Peace.